How are subsequent payments for unpaid employment taxes allocated once a trust fund recovery penalty has been assessed? Once a trust fund recovery penalty has been assessed, how are the payments by all of the responsible parties allocated upon receipt by the federal and state governments? This is important because if a subsequent payment is applied to the non-trust fund portion, penalties or interest, it doesn't help the responsible parties get out from underneath the portion that they owe personally. This basically turns on two concepts, whether the payment is voluntary or involuntary. Where a payment is made voluntarily by any responsible party, the responsible party can and should designate their voluntary payment to the trust fund portion of the underlying tax liability. A payment by one responsible party will reduce the underlying debt of all responsible parties by the amount of the payment. A payment by one responsible party against the trust fund portion will reduce the amount owed by all other responsible parties on the trust fund portion. While the Internal Revenue Code is silent on the allocation of voluntary payments, the IRS has taken the position that a taxpayer can allocate a payment in any way that is in their best interest. Thus, we advise responsible parties under our counsel to physically write on the check where to apply that check and specifically designate it's for the trust fund portion of the tax liability only. If no writing is made on a check, no designation is made on a check, or the IRS determines the writing is ambiguous, the government will apply that check any way they see fit. Ordinarily, they'll apply it to the non-trust fund portion, penalties and interest first before they begin to knock down the trust fund portion. What's most important to note here is once a revenue officer determines what you have to pay against your trust fund portion of the tax liability on a monthly basis, that becomes an involuntary rather than voluntary payment. When we're negotiating these type of installment agreements, what we try and do is get the government to realize that there's more than one responsible party, get them to spread out the liability against all responsible parties, and then, if possible, set it up so that the involuntary portion is as low as possible, and then we encourage our clients to make a larger voluntary portion so that they can designate against the trust fund portion and bring that down as fast as possible. Again, if the IRS is left up to their own discretion, they will ordinarily apply against the non-trust fund portion first, leaving available all the remedies they have at their disposal against the trust fund portion last.